Let's dive into the fascinating world of technical analysis, focusing on how we can use Bollinger Bandwidth, or BBW, alongside the Relative Strength Index, or RSI, to identify potential volatility squeezes and shifts in momentum. First, let's break down what Bollinger Bands are. They consist of a middle band, which is a simple moving average, and two outer bands that are standard deviations away from this average. The width of these bands can tell us a lot about market volatility. When the bands are wide apart, it indicates high volatility, while a narrow band suggests low volatility. This is where BBW comes into play. By calculating the difference between the upper and lower bands, we can quantify this width. A decreasing BBW signals a tightening of the bands, hinting at a potential volatility squeeze. Now let's layer in the RSI. This momentum oscillator ranges from 0 to 100 and helps us identify overbought or oversold conditions in the market. Typically, an RSI above 70 indicates that an asset might be overbought, while an RSI below 30 suggests it could be oversold. The beauty of combining BBW with RSI lies in their complementary nature. When BBW is low, indicating a squeeze, and the RSI is approaching either extreme, we have a powerful signal that a price movement is likely imminent. Imagine a scenario where BBW is at a multi-month low and the RSI is hovering around 30. This could suggest that the market is oversold and poised for a bounce. Conversely, if BBW is low and the RSI is above 70, it might indicate that the market is overbought and due for a correction. These setups can be incredibly valuable for traders looking to capitalize on potential price movements. But it's not just about spotting these signals. Timing is crucial. After identifying a squeeze with low BBW and extreme RSI readings, watch for confirmation through price action. Look for breakouts or breakdowns from the Bollinger Bands. A strong move outside the bands, accompanied by an increase in volume, can signal that the anticipated volatility is finally materializing. It's also essential to manage risk effectively. No strategy is foolproof, and combining BBW and RSI is no exception. Setting stop-loss orders and defining your risk-reward ratio can help protect your capital. Remember, the goal is not just to identify potential trades, but to do so with a clear plan in place. In summary, using Bollinger Bandwidth in conjunction with the Relative Strength Index can provide traders with a robust framework for anticipating market movements. By recognizing the signs of a volatility squeeze and momentum shifts, you can position yourself to take advantage of the opportunities that arise. So, keep an eye on those bands and the RSI, and you might just find yourself ahead of the curve in your trading journey.